Hey there, Midas Letter subscribers. I've got us today. Wolf Richter, the publisher of WolfStreet.com, joins me live from San Francisco. Wolf, how are you?
Great. Thanks for having me back.
Wolf, it's great to have you back. It's been too long. And Wolf, we were elated beyond description to read your recent headline about, well, first you pointed out the fact that the Bank of Canada is walking back its holdings of Canadian bonds because of fear of moral hazard. And then you published the fact that, based on a note that the National Bank of Canada put out, that the Fed or the Fed of Canada, which is the Bank of Canada, actually owns 40% of all of the ending bonds issued by the Bank of Canada. And that, to me, it was stunning that I'm hearing this from a guy down in San Francisco. I love you for your coverage of the Fed and central banks generally, but it was really uplifting to see, and very humbling also to see that, well, I've got to follow this guy in San Francisco going on with my own Bank of Canada, because nobody in Canada is talking about this. So when the Bank of Canada owns 40% of the issued debt of the Canadian government, what is the significance of that in your estimation?
Yeah, so today is the big day. So it apparently went over the limit today, the 40% limit. And the significance is that the Bank of Canada monetized 95% of the new issuance of the government of Canada in the fiscal year that just finished. And so essentially, the Bank of Canada bought nearly all of the bonds, all of the government of Canada bonds that the government issued in the past year. And 40%, okay, so by Japanese standards, it's not huge, but it for a country like Canada, it is a significant big chunk. By comparison, the Fed owns less than 18% of the Treasury securities outstanding. So in that respect, the Bank of Canada has leapt way ahead of the Fed, even though there's other differences in that. Number one, Canada is a much smaller country, and the debt of the United States is just enormous. It's just gigantic, and now over $28 trillion US. So Canada has been more. I'm going to use that word. I'm going to get killed for it. Prudent. Then the U.S. government has been and has issued less debt. But so within the confines of this 40%, the Bank of Canada is twice the level where the Fed is.
Sure. Alarming as a Canadian on two fronts, and comforting on one front, because the Canadian government has been very liberal with its relief financing, subsidizing welfare for the population, because everybody's got multiple access to different programs. If you're in Canada, the money has just been flowing like crazy, to the point companies have just stopped doing business, and they just keep the doors open and everybody paid thanks to this subsidy. In that respect, now I understand how they're paying for all that. They're, they're obviously financed by the Bank of Canada. The fact that the Bank of Canada has to be the only buyer of its bonds for the most part is alarming. That nobody else wants Canadian bonds.
Well, there's probably demand for them, but the idea was to push down interest rates, long-term interest rates, and to create the asset bubbles that we now have. And so that was the purpose. Not that there aren't enough investors out there that want to buy those bonds, but they might not want to buy those bonds at the current interest rates. And so they might have to be pulled into the market with higher interest rates. And that would put some limits on asset price inflation. And the Bank of Canada has been out there obviously inflating one of the most majestic housing bubbles in the world. And the way it's done that is by pushing down long-term interest rates.
Mm-hmm. Majestic housing bubbles. I like that. That's rich. And I like your choice of the word prudent, which in this day and age has become a relative term rather than an absolute. Okay, well, so how does the how does the bank, and this is one of the things that I find confounding, is that, to a moral hazard, if the federal government out and, basically create its own money, we're kind of used to that now. And the whole premise that this international debt load is somehow serviceable, sort of is a reality that's been left in the rearview mirror for decades almost at this point, anyways, with all of the money printing going on. Then, like, how does this sort of affect other governments, and how do other governments look at Canada? Like, I got to think that people are looking at Canada and going, well, Canada, that's pretty ballsy of Canada to go out and buy all of its own bonds. Who do they think they are? The United States, but the United States only owns 17 trillion out of, or 17% out of 28 trillion, I think you said. Mind you, they have, a much bigger actual debt. So it's inconceivable to me that the debt is repayable in this lifetime by any economic engine conceivable. So my question for you now is, what is the end game here with all these central banks? Is there a big debt jubilee on the cards? Is there some kind of mutual write down? Like, how does this end in your estimation from where you sit?
And I'm not sure there is an end to it. I think it's a continuum, and it will keep on going. And what we're looking at now is inflation. And if you demolish the purchasing power of the currency, you also demolish the purchasing power of assets that are denominated in that currency. So the debt outstanding with enough inflation will, at investors' expense, will be diminished by the purchasing power. The debt will be diminished by the rate of inflation. And I think that's the strategy now. Everybody knows that you can't pay back that debt, and there's never been any intention of doing that. Every single country is increasing its indebtedness right now still, and they have no plans of even stabilizing it. I think it's just not going to even be on the table to discuss paying off this debt. It's just being serviced and being rolled over, and more debt shows up. And then the hope is that inflation will somehow take care of this. And inflation is pernicious. It's not a good thing. And if your labor is denominated in dollars and the dollars lose purchasing power, the labor loses purchasing power. And asset holders with their assets lose purchasing power. But that seems to be the strategy out, to stir up enough inflation to where these debt loads become more manageable.
Mm-hmm. So then, getting back to the whole idea of moral hazard, it was, I guess, then courageous on the part of the deputy governor of the central bank to use that term and to put that out there as a reason for wanting to seek a lower balance sheet of Canadian bonds. But that's the concept of moral hazard in the thinking of the Fed, and in the entire sort of psychological manifestation of the Treasury and the Fed in the United States, is that, never mind avoid hazard, we are the leaders of moral hazard. And if a government hyperinflates the monetary supply at a rate which does not even allow for the working class to acquire the goods needed for day-to-day survival, is there not a risk? Is there not a concern about the amplified threat of civil unrest on a broad scale?
Yeah, I'm not sure central banks understand that. They're so focused on asset holders, and in the United States, I happen to know the numbers. So we have the bottom 50%, which essentially hold no assets. Their main assets are durable goods such as cars, appliances, etc. And so this whole asset price inflation completely bypassed them. So now they're struggling with inflation. And the top 1%, they hold enormous amount of assets, and they're not going to worry about inflation. as long as inflation is in a reasonable range. And they doubled their asset prices over the last year in many cases, and they've come out, extremely well. And Powell himself, so the Fed Chair Powell himself has put out this statement in the Wall Street Journal where he essentially says, we are going to come out of this stronger than before, and we are, as we have done before. And I replaced this headline with "We the Rich," and that's exactly what happened. We the rich have gotten out of this twice as rich, and as we have done before, and the bottom 50% has been left behind, and so. I don't know that the Fed is actually looking at this. I'm citing Fed numbers. These are numbers that the Fed collects. So it seems like they would look at this as their own numbers, but they don't ever seem to react to it. As long as they can make the asset holders wealthier, that's the wealth effect. So maybe they can spend a little more money and maybe they'll hire a few more nannies and create a few jobs and then let the rest of the people figure out how to live. So, I don't know that the Fed will see social upheaval as a consequence, but that any central bank sees social upheaval as a consequence of these enormous wealth disparities that they're creating with these policies. And I wish they would, because we have a lot of issues in this country and in other countries, and part of that has to do with this just gigantic wealth disparity.
Thank you for your time today.
Thanks for having me.